Hello, everyone. I'm really pleased to introduce Julie Wong to talk about financial strategy as it applies to law firms and other professional services providers. Julie, on your profile, you describe yourself as a finance and business growth mentor, a fractional finance director, a consultant to business owners, and most intriguingly, a financial fortune teller. It would be great to hear more about your background and how you have got into advising businesses on financial aspects.
This is a bit of a confessional. I have been an accidental accountant and then a slightly reluctant accountant. So I wholly appreciate why people just don't like, the financial aspects of running a business. They always, it's the last thing that they want to be dealing with. So the majority of people, it tends to be the elephant in the room, and then you're like, oh, somebody else can look after that for me. I guess from that perspective, having crunched numbers for the past 30 years of my life, I totally get it. But it's really funny that a few years ago, that when I became an accident, so having gone from being an accidental accountant, I went to being an accidental business mentor. I then started supporting businesses and on the sort of financial strategy, helping them understand what aspects of running a business they need to manage from a financial perspective and what value it brings, because a lot of business owners don't appreciate why finances is more than just your annual accounts or perhaps management accounts and VAT returns. Whereas you think about, they're crunching numbers all the time because it drives their decision making. And so there's a big gap between the thought process and action taking behind a smaller business owner versus those that are bigger and have in-house financial departments and support. There's a lack of a lot of knowledge that they're not making use of because it's data. And as I always say, data-driven decision making is really important for running a business.
Yes. The natural thing for them to do is what they see as the business itself, and the finances are almost an afterthought.
It is very much an afterthought, but I think it's a bit like a three-legged table in some aspect. You've got the sort of operational fulfillment side of the business, and then they'll start focusing on trying to bring the clients and customers in, which is essentially the marketing and the sales aspect. But that no table will stand up. You need the third leg, the finance bit, because if it doesn't work out financially, then your business is going bust. So if you haven't thought about it from that angle, you are really much in danger. You're putting your business in danger.
Yes, absolutely. Tell me about this financial fortune teller idea. How does that fit into it?
I know. It's a bit of a weird title. People think I'm about to whip out the tarot cards and the crystal ball. It's not quite. No, it's nothing quite so esoteric as that. It really boils down to it's two things, really. One is if you understand your numbers, then it really does help you make your business more profitable, because everything you do in your business shows up in your finances and in your numbers. So if you do something well, it will show up. If you do something badly, it will show up. And if you know that, then it helps you to make the right actions. And thinking, oh, what made my revenue go up? You think, oh, that's rather good. I think I'll do that again. Likewise, on the cost side of things, you're thinking, oh, my costs dropped or my costs went up. You think, gosh, what happened there and what can you do? So it empowers you and enables you to do more of the good stuff and less of the bad stuff, because it will all show up. And if you're not looking at your numbers until, say, the year after the year end, so potentially if a transaction happens on the first day of your accounting year, and you do not file your accounts until the 9-month deadline, the transaction date and the day you look at your number could potentially be something, year and a half.
Yes.
So if that were the case and you would do something really bad, then it's a bit late to start turning the tap off now, because the water's been gushing out of your company, essentially. Or you haven't made use of an opportunity that was there that you could have reaped the benefit of multiple fold in that intervening period, which is why it's really important to start looking at your numbers on a very regular basis and understanding why that number is that number, whether it's good or bad.
Yes, absolutely. And I know from my own experiences that businesses sometimes get carried away with growth ambitions without putting in place the financial foundations, having a financial plan, if you like, related to those growth ambitions. Is that your experience as well?
It is, because for a lot of, especially for the early stage people that start up their businesses, it's very much around, they are focused on what they do, then it's about bringing the money in, and which is absolutely important, but they lose sight of, hey, the third leg of the table again.
Yeah.
And the danger of that is they're not managing their cash properly or their profitability of the business, because many of them will look at their bank account, and it doesn't matter. I've seen business, I've been in business for like over 40 years, and the guy's close to retirement, and he still uses the bank account as a gauge as to where they are at any moment in time, which is very dangerous because it doesn't reflect the big picture. But also, it's very important to start putting processes in place at as early as possible. If you do something early on, like on a repeated basis, then it's good to get a process in, because it's far more difficult to impose a process into something that has a natural kind of organic-y kind of process. And if you start bringing staff in, everybody will do things differently. And then if you start setting rules, they're going to go, I don't like doing it that way. And it's hard to implement a process when you've got loads of transactions going on, rather than say, I've got a few transactions, this is the process, and the process just builds to encompass all the changes. So managing finance is a bit like filing. It's filing all your numbers in the right place. So if you imagine having 5 bits of paper to file, having a filing system to do that, rather than have a big pile of 50 pieces or 100 bits of paper, and then saying, I need a filing system. It's far more difficult to start organizing your thoughts around that, rather than just keep building the process out as you go along. So financial foundations is really important in that perspective.
Yeah,
otherwise, if you don't have the foundations, your business can collapse through lack of resources. You don't have the time, you don't have the system, you can't find the right bit of paper, you don't know who's paid you, you don't know who you owe, you've no idea where the orders are.
Yes.
In terms of your contracts or your
and don't necessarily even know whether the cash is where the cash is coming from, when it's coming, and whether it's going to come at all. That you
Absolutely.
need to expand.
Yeah.
So once you've got those financial foundations in place, why is it so important to develop an overall financial strategy? And what are the typical problems that businesses have when they don't?
It's about long-term vision. So we all know that if we have a long-term goal, we're going to be far more successful at achieving it. And because you're aiming somewhere. So we all have a destination to get to as a business owner. So without a plan, it's a bit like you would never leave the house in the morning not knowing where you're going. You have an idea of where you're going, how long it's going to take you, and what resources and what method you're going to use to get there. So a business needs the same thinking about it. So I think of a strategy as being like your Google Maps for your business. Where you're going how to get there, and all the components around that. Things with having a strategy is often it's words or pictures. I want to be the most regarded, highly renowned, largest practice in London, whatever that might look like, but it tends to be words or pictures. And it's very difficult to gauge your progress with words and pictures. So a financial strategy, I think of it as just being a strategy that's been converted into numbers that you can manage and monitor it. So what does success look like? Is it turnover? Is it a number of clients? Is it staff count? What does big look like? What does successful look like? What does geographical success look like? So what is your target? And you convert those into numbers, and then you start being able to break those down into mini targets as to timeline as to when you want to achieve that. And what is the critical milestones? Then you can take action as to whether you have reached that milestone in that time. Because if you don't, you suddenly think you can't do a mad scramble at the last stretch and go, oh my God, I haven't done what I thought I was going to do. It's small levels of action consistently applied, as everybody knows.
Yes. And I think, especially for law firms, there's often a tendency to confuse the activity, the frontline thing of delivering legal service, as the whole of the business, and the number of people you've got as fee owners who are active in that. But actually, that you really need to be looking at the business as a whole. And of course, that does, as you say, break down when you analyze it, it breaks down into numbers, and that's where your expertise comes in.
Yes, it gives you, look at your numbers gives you a holistic view of your business. Looking solely at the number of clients you have or how much you have billed in any 1 month, 6 month, yearly basis is only part of the picture. Because if you look at it, if you're looking at just that from that side, then you only look at the revenue side. and you're not looking at the cost side. So what falls out at the bottom is the profitability, because what they say, turnover is vanity, profit is sanity.
Yes.
You're only looking at one half of the picture. So you need to look at it from a whole perspective. And I say, going back to all the numbers, what makes a number that number? So if you want to bring your revenue up, there's two things that drive revenue. One is a volume of contracts you are providing, and two is what price are you charging for those contracts. Those are two levers you're pulling at any moment in time. But then what is the cost base of providing that level of service? Because if your quality isn't there, it could be the fact that you're not providing with the right staff, or you're not providing with the right qualified staff. It could be the wrong level of staff. It could be just poor quality of staff in general. So even customer satisfaction, client satisfaction will have a financial impact on your business. So pretty much everything that you do, every thought that you have will impact your bottom line.
Yes, absolutely. Julie, thanks very much for being with me today.
No, thank you, Jonathan, because I think it's really important that professional practices actually think of themselves as a business, because quite often no, we're a professional services firm. But at the end of the day, it is a business. It's all about providing your customers with a service that you want at a fee that is suitable and appropriate for your firm. And you are then operating at an efficient level so that enables you to deliver it and you have a happy practice. Because if you don't have your finances under control, it can be very stressful as to knowing when the fee income's coming in, when your costs are going out. And Jonathan, you mentioned the aspect of the cost of insurance. So making sure that you have the cash in place to pay any insurance policies, your indemnity policies.
Professional indemnity is a huge expense in law firms. Yeah.
Absolutely. So it's making sure that you have the fuel there and you're not looking at your fuel gauge and go, oh my gosh, I'm running on empty.
Yeah.
Top-up point is not near enough.
Absolutely. Well, Julie, thanks so much.
Thank you very much, Jonathan, for having me here today.